Welcome back, investors. Today we're diving deep into the world of S&P 500 exchange-traded funds, ETFs. With so many options out there, it can be overwhelming to choose the right one for your portfolio. But fear not, because in this video, we're going to compare some of the top contenders to help you make an informed decision. Before we jump into the comparison, let's quickly recap what an S&P 500 ETF is. Essentially, it's a type of exchange-traded fund that aims to track the performance of the S&P 500 index, which represents the 500 largest publicly traded companies in the United States. Now let's take a look at three popular S&P 500 ETFs: SPDR S&P 500 ETF, SPY, iShares Core S&P 500 ETF, IVV, and Vanguard S&P 500 ETF, VOO. These are among the largest and most widely traded S&P 500 ETFs on the market. One of the key factors to consider when choosing an ETF is the expense ratio. This is the annual fee charged by the fund to cover operating expenses. Lower expense ratios mean more of your investment returns stay in your pocket. As we can see, all three ETFs have very similar expense ratios, with SPY and IVV both at 0.03% and VOO slightly lower at 0.2%. While the differences may seem minimal, over time, they can have a significant impact on your returns, especially for long-term investors. Now let's turn our attention to performance. After all, the whole point of investing is to generate returns. We'll compare the historical performance of these ETFs over various time frames to get a sense of their track records. Looking at the 5-year performance, we can see that all three ETFs have delivered impressive returns, closely mirroring the performance of the S&P 500 index itself. However, there are slight differences in performance that may sway your decision. Another important consideration is the size and liquidity of the ETF. A larger fund size generally means lower trading costs and better liquidity, making it easier to buy and sell shares without significantly impacting the market price. Here we can see that SPY is the largest ETF in terms of assets under management, AUM, followed by VOO and VV. When it comes to average daily trading volumes, SPY also takes the lead, followed closely by VOO and IV. Finally, let's talk about dividends. Many investors rely on dividend income as a source of passive income, so it's essential to consider the dividend yield when choosing an ETF. As we can see, all three ETFs have similar dividend yields, with SPY and IVV both around 1.3% and VOO slightly higher at 1.4%. While these yields may seem modest, they can add up over time, especially when reinvested. In conclusion, when it comes to choosing an S&P 500 ETF for your portfolio, there are several factors to consider, including expense ratios, performance, fund size, liquidity, and dividend yield. While all three ETFs we've discussed today have their strengths, ultimately the best choice for you will depend on your individual investment goals, risk tolerance, and preferences. Remember, investing in the stock market carries risks, and past performance is not indicative of future results. Be sure to do your own research and consult with a financial advisor before making any investment decisions. Thanks for watching, and happy investing.